130 countries, you have your pulse basically in the global economy. What's the effect of the trade?
So far, quite little. Now, there are obviously people moving all over the place. You talked about China and where Chinese travelers are going. Last year, we think the Chinese travelers outbound were up about 6% from the year before. 135 million, roughly, trips across national borders. The U.S. grew much slower than the rest of the world. So if you look at where Chinese are going, they are going more and more faster to places like Europe than they are to the United States. One of the issues we just raised in the White House was how do we make sure that we're extending an invitation to travelers from abroad to come and vacation here, leave their money here, and go home.
So Arne, what you said was so far little effect. And the question is, as this lingers, as the dispute with China lingers, could it permanently change patterns? I talked to Hank Paulson, the former Treasury Secretary, yesterday about that. This is what he said.
I think we don't pay enough attention to the dangerous long-term impact. Companies and countries want to do business with the United States because we've got reliable, stable economic policies. And so the question really is, is China going to start looking for new markets for which they're going to buy soybeans, Brazil and Africa? Are they going to be concerned that they need to protect themselves if there's another tariff war and they need other suppliers?
So, Arne, whether it's soybeans, whether it's manufacturing supply chains, whether it's tourism, at what point, if this lingers long enough, not beyond months, into years, could it really permanently damage U.S. relations and trade?
Well, I think there's sort of two ways of looking at this. One is a narrow one, which is where do the Chinese travelers go to? And I think we are in a bit of a global competition today. They are new travelers often, resources for the first time that allow them to go and see the world. Many of them, maybe all of them, know of the United States and would really love to come to the United States because they've seen so much of this in movies and in other cultural things. And if we lose that first competition and they go somewhere else, I think the likelihood of getting them back to the United States is more difficult in the future. Now, that is a issue really only about our industry. I think when you look at the broader trade portfolio, the question is what happens to economic growth, because economic growth drives demand for travel. And if companies are investing less in China, or Chinese companies are investing less in the United States, or there are other bits of the trade pattern which cause GDP to grow slower in China and the United States, it will have an inevitable impact on demand for hospitality in both places.
Arne, you mentioned the fact that you talk to the White House fairly regularly about these issues. Do you have a sense that the president appreciates what you just said, that it is all fine and good to go for better trade relations with China? Everyone agrees with that, but time's a wasting.
Well, I don't talk to him all that frequently. I was there 2.5 weeks ago to talk particularly about inbound international travel to the United States, where the U.S. is clearly losing share. And one of the things I said to President Trump was, your voice around the world, when you talk about security or immigration, can be heard as a voice that you're really not welcome to come to the United States. And that is not necessarily what we think you're trying to say. We're not suggesting for a second, for example, that we compromise on security. And by the way, travel is not really about immigration. Travel is about where people are taking vacations or where people are doing commerce. And so isn't there a way to extend a welcome to the rest of the world, even as you pursue your agenda around security issues and immigration?
What did he say?
He was open to that. He understood, in fact, how that voice could be misinterpreted around the world. And I think was open to trying to set some targets to see if we couldn't grow our share better in terms of international arrivals.
What would it take for you to change your capital allocation and where you're going to be putting your money in terms of countries?
Well, this is one of the things about our business which I think is helpful as it relates to the impact to us from the trade war. We are not investing capital in China. We are opening hotels. We have about 315, I think, open in China today. We're probably opening a hotel every 10 days or so, maybe every week. But we're doing that always with Chinese partners. They have the expertise and understanding about the Chinese real estate market. And so our business in China, while branded with Marriott brands is very integrated in the Chinese economy.
So it feels like the conversation of how can China respond can get put to the company level, where China becomes punitive for U.S. companies operating in China. Do you feel like you're protected because you have China-operated partners, or do you feel like you'd still be at risk?
Well, there's plenty of uncertainty here, so it'd be too much to stop and say under any scenario we're protected. But I do think our business is highly nuanced in terms of, is it an American business, is it a Chinese business, is it a global business? Again, the hotels are owned by Chinese real estate investors, which means the economics of our operations in China are disproportionately benefiting Chinese companies. Second thing I think is really important is that in every hotel in China, even in the most international city, which would be Shanghai, the majority of our guests are Chinese, our employees are Chinese. And so you end up with, okay, what exactly would be the trade implication of being focused on the hotel business, for example? And the other thing I think that is important here is we're not terribly strategic. It's not a super secret software program, for example, or a finance industry that sometimes has a national interest associated with it.
So Arne, you mentioned earlier that really global growth, or domestic growth for that matter, really drive your business to a large degree. How do you see that right now? Is global growth breaking down? Is that synchronized growth breaking down? Where are we in the United States? Where are we in the cycle?
I think we are continuing at a sort of steady state pace in the United States. Maybe the bad news is, if at least looking at our business and our industry, yes, we had a good jolt for the U.S. economy with stimulus, with the tax cut. We've got $1 trillion or so of deficit spending, which are helping with the economy. But the demand levels we see in our business today are not that different from the demand growth we were seeing a year ago or 2 years ago. The good news, however, is it's still positive. We're still growing, modestly, but steadily. And I think we would expect that that's going to continue for the foreseeable future.
And part of that growth is your merger with Starwood and your push into digital and technology. Walk us through the opportunity set for that and where you're at with it.
Well, it's been just about 2 years now since we closed on the acquisition of Starwood. It's been a fabulous run. We've, of course, made us bigger, and we've had an awful lot of work to do to integrate these two platforms. The most recent thing we did was late on Saturday, August 18th, when we finally got to one loyalty program, bringing SPG and Marriott Rewards together. Watching it from the inside, of course, is a bit like watching sausage being made. You've got a whole bunch of systems that need to come together, billions of data files that need to be transported from one to another. But we've now got it to the point where our customers can earn points and redeem points across the entire portfolio, and we're really excited about seeing the impact of that.
What's the biggest risk you see for next year?
Well, I think trade is the thing that we worry about. I do think the stimulus in the U.S. economy is more powerful today than the potential negative impacts of trade. But trade is also about sentiment. And if we see too many companies, too many individuals get cautious because of the sentiment around trade, I think that's a place where we could see GDP weaken.